Good morning, America. Thank you for watching Taxes Made Easy here on the smartmoneyculture.tv. Got an interesting show today, and we're going to focus on how to defend your rights with the IRS. I'm going to try to spend a lot more time on the topic of the day. There's so much news and juicy things out there, but sometimes I can get carried away. But want to try to dedicate more time to that. So we've got a lot to cover here. International news, but a lot of news here in the United States as to what's going on and some ways different taxes are hurting people, or affecting people. And again, we're going to focus on making sure your rights are respected, that you actually get your day in court. And again, it's very important. People feel a loss when dealing with the IRS with taxes, but you do have rights, and you have more rights than if you leave and you're not dealing with the IRS anymore. So we'll be back shortly. Welcome back, everybody, and I'm going to go ahead and just share the first article here. It's kind of an interesting article. It just shows the change in times, how you can never quite tell what's going on. RedBox, which I remember for years, people, and I would say, that's a brilliant idea to sit there and put red boxes all over the place, just at grocery stores, at Walmarts. Now the market's changing again. So RedBox is becoming the new Blockbuster, which, again, you still see them. They're ubiquitous. They're all over the place. I'm not sure what's going to happen with those. But why aren't people using RedBox anymore? Because it's so easy to just stream stuff from your home. The availability of movies from streaming services is it's just so easy. It just comes to your home, and so we have so much entertainment now that going to a DVD kiosk and renting Redbox is not. People aren't using it nearly as much, but again, they have a lot of debt. I don't see this as a huge problem with the economy as much as, or sign of the times as much as, just a changing marketplace, which happens. And this is what happens. Someone has a great idea, makes a ton of money for a while, and then over time, it changes. So this is why when you're investing, you should have a good financial advisor seeing what's happening with market and pulling out of different markets when it gets to that point where it's just, it's not making the same amount, or the market has just changed. So here they owe money to landlords, car vendors, other business partners. I mean, they just owe everybody. When they were bought out in 2022, they had $360 million in debt. So they're going to go through bankruptcy and see what happens with the company, if we still see those red boxes all over the place or not. So the next article is actually a little more sobering. Now, comes from the Woke Spy, which is right-leaning site, but this is a very interesting, and this has to do with crime rates and how things are falling. So it's not exactly taxes, but it definitely affects our tax dollars. I'm going to talk about, and this is going to connect to an article that we're going to be following up with later. So again, we have pretty much an open border, whether or not you agree with it or not. One of the consequences of this, though, is that we're seeing Venezuela, which has a horrible crime rate. It's run by Maduro, communist, communist light, heavy on the socialism, huge restrictions on freedom. The country is an absolute mess. It's a bankrupt state. It's pretty much being run as a little dictatorship, which is what happens with most communist countries. And here they say it's a socialist nation. It's very heavy on the socialist, bordering on communism. The violent deaths in this country is at a 22-year low. Why? They dropped by a quarter from 2022 to 23. It's still pretty high, 27 murders per 100,000 people. But the rate was more than triple that figure at 92 homicides per 100,000. So again, you have horrible economic prosperity. And the gangs that are used to beating up on individuals and businesses can't squeeze them for any more money. So a couple things are happening. They're being exported where? To the United States. So we used to have 394,000 Venezuelans in country. Now that's risen to 668,000. And a lot of the news that we're seeing, with women being raped and murdered, has a lot to do with criminal people that they committed these crimes in other countries, and then they come to the U.S. And some of them are people that have Trump's already deported. So a lot of comments going through here. Unfortunately, again, historically, we had people coming here that really wanted to succeed. And I think there are many, many people that are very hard workers, and they come to the United States for a better life for them and their families, and they want to work hard and succeed. And again, I've worked with many immigrants as a Spanish-speaking firm, and I'm a Spanish speaker myself. That is how most of them come over here. Unfortunately, more and more we're seeing the criminal element come over, and it's become a big problem. So, and that's going to add more and costs as well across the board, and that's where it's going to come in later on. So the next article, and I clicked off the sharing, so let me jump back to it. Has to do with Boeing. Boeing is still in the headlines. It's going to continue to be in the headlines, or in the headlines. Spirit Aero, which was part of their manufacturing, they split it off years ago, and then now they're buying it back. So for $4.7 billion, they're buying it back. Now they're not getting the whole thing. They're getting the part that deals directly with them, because what happened is Spirit was split off as in they did a lot of the manufacturing of the actual infrastructure of the plane, and they were working for, when they split off, they were working for other airlines, etc. So it was an aerostructures company, and they split up in 2005, but now they're bringing it back in. Why? It was seen as a cost-saving move when they originally split off, but because there's less oversight with what's happening with Spirit, Boeing's kind of putting the blame on Spirit for some of these quality issues, but by bringing it all under one house, there'll be more oversight, and hopefully Boeing can manage their issues a lot better. But Boeing has plenty of issues too. There's plenty of issues that can't be blamed on Spirit Airlines. So again, it'll be sorted out between the services serving other, Airbus and other companies in Europe, and that'll get figured out. But again, big news. Hopefully that's good news for Boeing long term. Again, I'm still rooting for Boeing. It is a huge provider of jobs, and a huge part of our economy too. The next article, this is a interesting article talking about the mansion tax in LA. So on one hand, it's kind of hard to feel, for many people, sympathetic.
Sapphire Lounge by the club, with craft cocktails,
And
locally inspired menus,
so let me go ahead and
space to relax. It's what an airport
So,
lounge is supposed to be. Chase Sapphire Reserve.
Los Angeles
Make
got the
more
bright
of this
idea.
yours.
Let's pass a mansion tax
Very, very real.
on anything
This
over
mansion
$4
tax
million.
that,
It's
Los
taxed at an
Angeles
additional
has put on real
4.5%.
estate,
It's over
Los
$5
Angeles
million. It's being
this year,
taxed at over
which we went into
5.5%.
will be now.
So here you have
on as long as
realtors
we
Josh
know,
and Heather Altman. They
at the
have a
moment.
TV show that's been running for many
anything
seasons.
that sells over
$1 million
$5 million,
listing
you
in
have
Los
to pay
Angeles.
4.5%. Anything that
And
sells over $10
they're
million,
saying this is
you
having a
gotta pay
huge impact
5.5%.
on the
That's a
housing
big
market.
deal.
Not only
And trust me, it trickles down big time.
for high-end
It's not
homes,
just rich people,
but it's
who have
also
to deal
having a
with it.
huge impact
It's going to affect everything. It's going to affect
for the
bottom
down the line.
with developments, flips, investments,
So,
and that
right
will
now-
trickle all the way down. Like I've said before, on interviews. That's going to trickle all the
You know,
way
they're not in a
down
crazy
to,
market. Things are not
people who
moving.
work on
Things have
homes.
slowed down.
They're
And the
gonna be
whole point
affected.
was
There's
to
gonna be
pass
less
this
money
tax was to
pay.
get more revenue
People who have saved maybe
to
their whole life
support
to,
the homeless. But this is a classic example
get
of
ready to
when you
sell the house
tax something,
and
you're going to
retire
get
now,
less of
might
it.
not be able to. So
So if
it's
you
a
want
very, in
to
my opinion, I've
discourage
always said it's a
economic
very
activity
poor
in a certain
decision to
area,
do that.
raise the taxes on it.
Hence that,
And generally
ELA
that
measure
works
big
unless
time.
it's, you know, things
I
that people
think
are addicted
that
to, like cigarettes,
they
alcohol. That's
hurt
one of the reasons there's so
themselves
many
with the LA
taxes
real
on
estate
cigarettes and
market big
alcohol,
time without even,
because
really
people will
getting
buy
a
it
fair shot
regardless.
at it.
They're not very price
So
conscious.
that's going to
They
be,
want it bad enough
that's a big
that
difference
they'll
with
pay
this
more
year.
for it.
And also,
So in
just adding
2022,
that
they
it
passed
also
it, went to
affects
effect,
the
I believe
values
last year.
of every property
And
from every price range, because the people that are
the
doing
funds
the
are
5
all
to 5
to
and a
go
half
support
are
the homeless
trying
and
to
housing
figure
programs
out
in the
how to
city.
avoid paying the taxes, so they're
So
reducing the price of their home.
what's the
The
reaction
buyers are
here?
going to have to eventually pay that tax
He's
whenever
saying
they
it
go to
trickles
sell.
down big
So
time. It's
it'll,
not just the rich
affecting
people who have to
under
deal
the
with
$5
it.
million market
It
also,
affects
because
developments,
those
flips,
property
investments,
values.
and if
So
people
Yep.
it's really
can't
just
or are having
impacted
a hard time
everyone.
purchasing
Everyone got, it's just
higher
the
end
5 million
homes,
plus, but it
it affects
really
construction,
affects the
affects
board,
availability
affected
of money, it
everyone.
affects
Properties values,
workers, people that are supposed to be buying
and
homes,
everyone's going to have to
slows
end
down
up
investment in
paying
real
part
estate.
of that
And when
$1
you
million
have that, then you get a smaller supply of homes, which is what they're seeing, which drives, again, the demand is still there, but it just makes things all that crazier as far as prices. So people are being creative and what they want from a home. They're trying to price it just below these amounts to avoid the tax. But again, you have people that want to retire now that can't. They have to wait until their home appreciates even more to try to be able to sell. And so, in general, the LA market is slowing down, hurting their real estate market big time. And again, that's going to mean less money for the homeless over time. So that's the thing. You pass a tax, you get a big boom in the first year, and then people adjust, and it's going to go further down. So not only are they hurting their real estate market, but they're hurting the very people it's supposed to fund. Because the California is notorious, and we're going to really get into that in the next article. They're notorious for when they pass a special tax, ooh, we get this new money, and then they strip away the funds that they were originally getting. So it's like a shell game, because they're always hurting for money, or most of the time they're really hurting for money. And in the end, too often it's the people that are truly in need are the ones that get hurt. So just going through, again, typically people are going elsewhere, Las Vegas, Nevada, Scottsdale, Arizona, Phoenix. They're looking to go to other different states where they don't have these tax issues. So, and it's not, you have all the issues coming from COVID, and when you add that to it, it just becomes a worse problem. So we're hitting a break, and we will be right back. Welcome back, everybody. Got an interesting article here, and this is California, of course. Kind of the poster child for what's wrong when planning for budgets. So they are really big on their exchange, and they passed a healthcare tax targeting again, being paid by California hospitals or the health insurance. So they're taxing health insurance programs, private healthcare insurance, to pay for more healthcare for individuals. So it relies on the special tax that health insurance companies pay. But how do health companies pay it? It's through taxing, making people pay more for private health insurance. So private health insurance, more and more is, being used and abused, and they don't care if the cost of private health insurance goes up through the roof, because the only people that can afford it are the wealthy anyway. So it just becomes more and more difficult to afford health insurance in California. But at the same time, they're trying to pour these metals into these issues into dollars into Medi-Cal and prop it up and make it a lot more available. So this is a classic example of special interests in California and the state government fighting over where tax dollars are going to be allocated, and they're fighting over this healthcare tax. Nobody cares about the tax and that it's hurting people trying to afford private health insurance. That's not a concern at all in this article, and that anybody expresses. It's what to do with roughly $2 billion additional in taxes that they're getting. And people that are paying for private health insurance, they're already paying $1,000 or more on average for a policy. If you increase another 100, 200, they just say whatever, who cares? So what are they doing with this $2 billion? So originally, Gavin Newsome made this deal with providers, and it was to increase payments to doctors, healthcare providers who see Medi-Cal patients. The problem is they have health insurance, but nobody accepts it because it pays so little that most doctors are like, I can't see anybody more. I can't afford to see Medi-Cal patients anymore because it breaks the bank. They want them to accept more low-income patients, but at the same time, it has to make sense here. So the catch is, and this is the real point of the article here, you have a special ballot initiative. This is California having all these direct voting initiatives where the people can speak up. And one of the criticisms of it, when it's used by liberals, they love it. When it's used here, it's being used by liberals, including Planned Parenthood, but it's using to force the California government to actually do what they say they're going to do. But the problem is every time you have these initiatives that force the government to use the money for one particular purpose, it doesn't make it harder for them to govern. But they don't govern very well anyway, so it's kind of a catch-22 here. So they're claiming that Newsom is backtracking on their agreement. So what's typical, just like the other articles, when they get some money, so you have this tax coming in, they're taking other money, or they're either siphoning away this money, or the original money allocated to Medi-Cal to pay for other issues in the budget and to offset other cuts. So they're trying to hold his feet to the fire, and when the budget he just signed puts most of that money into the state's general spending account, which means the money can be used for anything, it goes anywhere. So if they pass the ballot initiative, they won't be able to do that. That would force more money into Medi-Cal, and then the people that behind this initiative would get more money, doctors, hospitals, but there's plenty of other people that would get left out. So again, it's when you have piecemeal legislation like this, there's winners and losers, and there's always winners and losers. So Newsome, they're trying to fund money to other people. So, and really it is California Medical Association, Planned Parenthood of California, the biggest supporters of this initiative. And they want to make sure or prevent lawmakers from using that money on other services. They want it to stay with Medi-Cal. That's the whole point of the tax initially, but politicians are great about siphoning money away. So, and part of this issue is this is where it gets fun. Health insurers agreed to be taxed to get a dollar for dollar match from the federal government. So the whole point of this is to get more federal funds to support the system, but it does really seem that's built on a house of cards. So overall, it's supposed to create, or the taxes to generate $5 billion in revenue, and they've used this to offset general fund spending on Medi-Cal, which is becoming bigger and bigger. But the federal government is putting the brakes on this. They're saying, okay, you guys are trying to go for every dollar you can, but you guys are one of the biggest abusers of the system. They're trying to play it just right so they get the maximum amount of federal dollars from the federal government while expanding access and making it more available to anything. So they're making Medi-Cal more expensive at the same time that they're trying to get the maximum amount of federal dollars. How are they making it more expensive? So during the Great Recession, some services were cut, adding new ones. They expanded eligibility to include all low-income Californians regardless of citizenship. So you come across the border, boom, you get automatic health care. And more than 15 million Californians are enrolled in Medi-Cal. But you have all these additional people, inflation going through, but no rate increases. So at the same time, it doesn't make a lot of sense. So you have Assembly Member Akela Weber, who's a Democrat from La Mesa, saying it's nice to give people insurance, but if they have no providers to go to, we haven't done much. So it sounds like a lot, but I mean, you're giving more and more people insurance, encouraging them to go to the hospital and use its services. But the hospitals aren't getting paid more. And you have more hospitals closing. So, I mean, while Weber hasn't endorsed the ballot initiative saying, look, this is a huge issue, and we need a real show from the state and a commitment that we're ready to support hospitals and doctors and providers. So on one hand, trusting the state government to stick by their promises is a really bad idea. They change their minds every time there's a budget deficit. They go in and they swoop in and take as much money as they can. And but at the same time, they want to make sure that more and more money goes to provide and cover more people. So they want to make enrollment automatic instead of people actually having to enroll every single year. They want to make sure that I'm going to further down where they explain this. I mean, it's you're making it more expensive, and it goes through, has a huge chart, and it goes through a lot of this. They're making it more expensive. They're making it more comprehensive, and they're expanding the program, which is costing the state more money, but they're hoping to get more federal dollars. But the federal government is getting sick of it because California is the worst out of 17 states that are constantly demanding and trying to get federal dollars to support this huge health insurance, their health insurance exchange. So, interesting point here. Dooley said the federal government has tried to get rid of this funding stream in the past because California is exploiting the system, and they're trying to get rid of how much, or reduce how much money goes to California, 17 other states that rely on this. And this is, currently it's the Biden administration, the Obama administration try to get rid of this yourself. They say, California, you're so big, you can take care of yourself. But again, you have states like California and New York, they're called welfare states. Why are they called welfare states? Because they rely on as much in federal funds as possible. And other states, many smaller states, end up paying the cost for states like California and New York that really do rely on federal funds for their social spending. So anyway, it gets really complicated. Main thing to get is there's no free lunch here, people. The more that we just try to give things away, the more it costs, and it hurts taxpayers in the end. I've got one last short article I want to touch on, and this dovetails nicely into our topic of the day. So this is in Illinois, Chicago. Suburban homeowners property tax bills skyrocket from $1,800 to over $30,000 a year. Why? How is this happening? So this guy's retired. He has a 3-bedroom, 1-bath house. Bought it in 2006 for $115,000. Says it can't be more than $180,000 right now. It's built in the 1950s. It was just valued at over $1 million. So that's a huge difference. And this is, he goes over it. It's only 960 square feet, no second floor, no basement. It's just a small home that he's bought and he's paid for. And basically, I chuckle a little bit, but the Cook County Treasurer's Office, the main county in Chicago, they messed up. They went and they assessed people. So when he tried to do it himself, again, it was frustrations, runarounds, and they told me he had a substantial increase, and they said, "Well, everybody's taxes increased because not from $1,800 to $30,000." And then he reached out to the news, and when he got to the news, then they said, "Oh, whoopsie, we made a mistake." So he had to reach out to the news, get this published, and as they were preparing this article, that's when they acknowledged, "Oops, this is a mistake," and they're going to correct it. He hasn't gotten the certificate of error yet, but they're working on it, supposedly. So, interesting story. Someone got smacked with a huge bill, fought it, and is winning. So that's really what I want to focus on today, is that when you're dealing with taxes, state and federal taxes, you do have rights. You can often contest and win when dealing with incorrect decisions. But the problem is you need to do things right. So, scary story here. And this is yesterday we were discussing this case. One of the reasons this was on my mind. And what we're looking at here, these are the rights outlined in the IRS Taxpayer Bill of Rights. Use these rights with the IRS. Stand up for your rights. Use the appeal process. Go as far as you can in the IRS before jumping to tax court. So this gal that we were talking about yesterday, I think it was my other associate attorney was talking to her and ran the case by me. I'm like, look, I don't think there's a whole lot we can do. We can talk to her and see, but she didn't file her taxes. Mistake number one. Now happens. A lot of people haven't filed their taxes. But then the IRS went and filed for her in the worst way possible. So they looked at some transactions she made and claimed that they just went off of all of the gains and none of the losses. So they're very good at doing this. They're very good at claiming that people owe a lot more money than they should. So in this case, she ended up owing around $500,000. Now, instead of dealing directly with the IRS and working with them, She took it to tax court, which someone made a lot of money off of her taking this to tax court. Bad idea. And now she's in front of district court with the Department of Justice. And they have summary judgment against her, which means they can go and collect against her. And yeah, they're demanding the equity in her house. They're demanding that she pay everything that she can on this. And can we help set up some kind of resolution? Yes, but can we prevent the Department of Justice from going after her assets? It is so much harder when you fight the system and you do it incorrectly. So when I see this happening, I'm like, you should have called us. If someone tells you, hey, let's just run to tax court, they're thinking, cha-ching, cha-ching, they're going to charge you like crazy, and you probably won't get great results. That's the frustrating thing that we see time and time again. I've helped plenty of people that did go before the DOJ. I have multiple cases now, and it's not where you want to go. It's not where you want to be. So we're going to look through these. This is just through IRS.gov. You type in taxpayer Bill of Rights or Bill of Rights, and it should come up. And these are, I'm probably going to continue this tomorrow, but we're going to start off. The right to be informed. So this is where I see the IRS taking a huge step backwards, but taxpayers have a right to know what they need to do to comply with tax laws. They're entitled to clear explanations of the laws and IRS procedures. So they have the right to be informed of IRS decisions about their tax accounts and receive clear explanations of the outcomes. When you call the IRS, good luck getting well informed. Half the time the people you're talking to don't know what they're talking about. They'll give you bad information. They're steering in the wrong direction. So how do you get informed? You have a right to this. When someone's telling you and starting to threaten you and say, look, we're going to garnish you this and that, I've said, hey, in the Taxpayer Bill of Rights, I have a right to be informed about my tax case and what's going on. You're not informing me. You're not providing quality service. You can always push back. You can always ask for a manager. And a lot of people, they don't want to lose the call because it's so hard to get through to the IRS. But remember, if you call between 5 and 7 p.m., that's the best time to call. It's always better to call later on in the week, on Wednesday, Thursday, or Friday. And that's when you can get through and actually talk to people. And sometimes you get better representation later on, better representatives later on in the evening too, because you have different service centers that are open across the country, and they are not all the same. So Seattle is one of the last ones that are open. That usually tends to be a better service center. Not to say there aren't great people across the country, there are, but they're usually so overwhelmed that they aren't focused on providing quality of service and being informed. So a great way to be informed is to go and pull your tax transcripts from IRS.gov if you have an IRS tax account set up. And once you do that, you can take that to a CPA, to a tax preparer. You can always call someone like us, a tax attorney, and have them review your letters, review your information. We don't charge for a free consultation. There's plenty of companies out there that don't. And so we're going to continue on when we come back right after the break. But being informed is the first big step. Welcome back, everybody. This is the final session here, and we're really just diving in, starting off with your right to be informed. Again, so many people call in, they don't know what's going on with their tax account. They don't know what they need to file. And I had someone that called me the other day, and he had 13 years of tax returns ready to go. And I asked him, have you filed yet? He's like, no, I haven't filed. I said, good, because you only have to do the last 6 years. There are times that you have to go and make sense to file older returns, but in rare circumstances, almost all cases, you only have to go back 6 years, saved them a lot of money by not having them not file those older returns. That's not something the IRS will tell you and inform you about. So again, helping people, steering them in the right direction and giving them helpful advice is something the IRS is actually pulling back on. They won't even tell you what years you need to file anymore, which flies in the face of this. They recently made that change, and when you're talking to them, they have to transfer you somewhere else instead of just sending you your transcripts that you need to prepare and file your returns or to see what's going on. So again, the quality of service is still going down. That brings us right to the next topic, quality of service. Prompt, courteous, professional. They're usually courteous and professional, but to me, but I can't tell you how many times I've called in and they start getting very belligerent real quick until I let them know that I'm an attorney. And then they adopt a very different approach because they know they're not going to get away with that. And again, whenever you call the IRS, if someone gets a little demanding of you and you need to pay this right now, this and that, I said, look, let me talk to your manager. Let me talk to a supervisor. Let me get your name and number, because the quality of service is really tanked at the IRS. I wish I wasn't saying this, but again, it's harder than ever to deal with them. We submit an offer and compromises, and they're getting rejected for the dumbest reasons. One of them, we faxed a response, and the supervisor, the case was closed out. And I asked, well, why was the case closed out? We faxed a response. We did it timely. And they said, oh, well, you need to mail in a response. So I said, if we have a tight deadline here, you want us to mail in a response rather than fax it in when I have proof that you received the fax? It's just, we're getting told different things. They're changing their tune. Again, making things up to reject offer and compromises to make things harder than ever on taxpayers. And the number one thing you can do is complain. Complain and complain loudly. To supervisors, to your congressmen, to your senators, we have a right to quality service, and the IRS is failing in a serious way to provide that quality service. And these are intentional decisions being made by the IRS administration and by the Biden administration. So you should absolutely be complaining to your congressmen, to your senators, and letting them know that this is not okay, that you're mad and you're frustrated by how horrible the IRS service is. And again, I don't mean to be so negative about the IRS, but right now their quality of service is in the toilet, and it flies in the face of one of their biggest guarantees here. It's number 2 on their tax bill of rights, and it's atrocious. So when you're dealing with the IRS, if you get someone that's horrible, you can always hang up on them. Click. If someone is being ridiculous, call back, see if you can't get someone else, and get better service. A lot of it depends on the representative you talk to. It is getting worse because they're training people to be ridiculous and very aggressive and to treat taxpayers like criminals. But you have the right, these are all civil matters. You have a right to figure out what's going on and to get this squared away without being treated poorly by the IRS. You also have ways to appeal. You can always ask for a manager. You can always ask for a CDP appeal if they launch collection actions against you. You can do a cap appeal if you need immediate assistance. But again, use these wisely. Too often I see people filing these appeals and they're doing it just to get a short break. They don't know what they're doing. So this is why I hate to say it, but more and more people need a good tax professional that understands their rights and understands how to work within the IRS to get things done. Again, it's harder for us because the IRS has gotten so bad, and we deal with it day in and day out as well. But again, it's your right to have quality service. The right to pay no more than the correct amount of tax. So on this case, you can lose some of these rights if you don't do it right. So this gal I was sharing earlier, it was incorrect. The IRS had filed for her in the worst possible way. She owed $500,000. And instead of getting that corrected at the IRS, she went to federal tax court, and then she ended up with the Department of Justice. Once she's with the Department of Justice, you lose so many rights. You don't get a homestead. They're not going to respect your home. They can seize your home and kick you out because you're not playing with the IRS anymore. You've now moved up to federal court, where a lot of the IRS rules and regulations just don't apply. And believe it or not, the IRS rules and regulations are in place because people complained to their congressmen, complained to their senators, and they received enough complaints that they actually, over time, did things and passed rules and regulations that protected taxpayers. That's why it's so important to understand the rules and regulations of the IRS, or to have a professional that does understand them to protect your rights. So you should be able to contest the amount, make sure it's the correct amount without getting pushback from the IRS. So if you need to amend your return, if you want to ask for a penalty abatement, including interest and penalties, to contest that, this is all your right. Also to verify, and we get this all the time, that people want to make sure their tax payments are applied properly. The IRS can be very confusing in how they do this, but you can call and say, hey, I made this payment, where did it get applied, where did it go to, and it helps to have someone that understands tax transcripts to go through and explain it. But there's times I print out all the tax transcripts, I highlight all the payments, and we go through line by line. Here's this payment, and we just match up every time they make a payment. This is what the IRS is showing. And there's times where someone makes a payment that's not logged in correctly to the IRS system. And so if we produce proof of that payment, canceled check, or an online receipt, and I don't see too many problems with online receipts, but a lot of times when people send in a check, if they have that canceled check, and we can produce that and say, here's a check, it's not showing anywhere in their transcripts, show me where you applied it. If you don't, you need to apply this to their debt, and they will. You have to push a little to get it done, but they will do that. So again, you have a right to pay no more than the correct amount, and you have the right to contest it and see within reason and verify that that is the correct amount. This is a big one that people don't understand, that you have the right to challenge the IRS's position and be heard. And it's so funny. Lately, we've had people where we challenge their decisions, we challenge what they tell them, and they get very huffy. And these are people, the first line, they don't know anything. Sorry. Very often, they don't know a lot. And those are the people that usually get the most offended if you challenge their knowledge. If you have someone that's, says something that's off the wall, and they get very upset if you raise objections, or they get very argumentative, ask for a manager, try to get to collections, ACS, because they provide better service, or hang up and call back again, because sometimes they're just going to do more harm than good. A lot of times they'll do more harm than good. And I would say, look, isn't it my right to raise objections? It's right here in the Taxpayer Bill of Rights. Isn't it my right to question what's going on, making sure I'm being treated fairly as a taxpayer, and put them back on their feet? Whenever you understand your rights, makes them step back. It shouldn't be like this. The IRS, yes, it's a giant collection agency, but they are paid for by our tax dollars. They are public servants, and they forget that. They forget that, and they treat taxpayers like criminals, which again is absolutely outrageous. You have the right to raise objections, provide additional proof and documentation, and to respond to formal IRS actions, proposed actions. You have a right to demand that what they're doing is done correctly, and to consider their timely objections and documentation promptly. That doesn't happen. Nothing's been done promptly at the IRS, but you should also receive a response if the IRS does not agree with your position. So I want to focus on this. When you call, and I get this so many times, someone calls the IRS, says, well, I thought I was put in a hardship status, so I thought we set up an installment agreement, but now I'm getting garnished. I'm getting, hit by them again. You have to verify everything you do with the IRS. I joke around that I don't trust the IRS as far as I can throw them, and we don't. If we don't get a confirming letter, or we can't pull it up in their transcripts or see it, we call them and verify that it's showing on their tax account, that they can see it, they can confirm it. Yes, this decision, whatever was supposed to have been done, was actually done and inputted on their tax account. So they have codes that they put in that show hardship status was approved, or installment agreement was approved. We don't just take their word that, I'll do this. One of the hardest things to do, and this is really ironic, lately has been to set up 433D installment agreements. So this is where it's an automatic payment. You would think the IRS would jump on this. Part of the reason I think their service has gotten so bad is they're trying to shove more and more people to just go online and set up an installment agreement. But if there's any issues online, then it kicks you back and forces you to deal with collections. If you want to do a penalty abatement and remove some of the penalties and interest, you can't do that online. You can't see when tax balances are expiring, but you can get that information if you call online and you talk to the right person. So again, this is something that is very important to know, that you do have appeal rights. You can raise objections. You can contest what they're telling you, and make sure that the information on your tax account is correct. It's not always correct. I've seen the IRS make plenty of mistakes. But it's not every case that there's mistakes, but I've seen plenty of times where it wasn't correct, and we were able to go through and get adjustments made to someone's account. I'm going to really focus on some of these others tomorrow. Be very careful, and this is something, you have a lot of appeal rights. So you can always ask for a CDP appeal. You can always go for a manager, a regional manager, if need be. The problem is when you're talking to collections, they used to be pretty good about getting someone on the phone that can sit there and you could elevate the question and get it addressed. They're worse than ever at that. Whenever you ask for the manager, 9 times out of 10, I never get a manager call back. So they're so overwhelmed right now that their customer service is in the toilet, which means most of the time you have to hang up, call back, or try to get sent to, you'll get the case escalated when you are dealing with either ACS, which that's a department I recommend dealing with more than anybody else. Usually they're better informed, they have more experience, and they can help you out and take care of your case. They can also move it forward as far as collections, but that means when you call in, be ready to resolve your case. Be ready to move it forward, and don't call the IRS, bring their attention to your case, and not be intentionally trying to resolve your case. So don't play around with the IRS. It kind of goes without saying, but a lot of people do. So stay tuned tomorrow. We're going to come through this and really hammer through this. And there are other ways, taxpayer advocate, TICTA, that we're going to talk about, ways to appeal this. But if you're not sure, if they tell you you have to do something, you have to pay now, you do have rights. This is not a communist country or a dictatorship where the government gets to tell you you have to do this, case closed. You do have rights. I recommend you learn what your rights are and learn how to avoid issues with the IRS moving forward. So most of the things that almost every client we get, either it's a one-time thing, something just happened, or we help them to improve their situation, to do better, and avoid taxes moving forward. Because that's really, people don't want to deal with the IRS. They're horrible. That's why people pay us. Because if they were easy to deal with, I'd probably be out of a job. But I hope everybody has a great day out there. And again, if you have questions, give us a call, 520-485-7371. And I'd love to help you out and answer any questions you might have. Thank you for watching with us, and we will see everybody tomorrow, bright and early, ready for another day.